Good morning, friends. It's another Friday. It's a great day to be alive, and it's a great day to hang out with you and encourage you with not only financial matters, but just matters of importance in life. And so hopefully these Friday updates are worth your while. Hopefully you're able to take away something useful to encourage you in the week ahead. And we just are grateful for you giving up some of your time to hang out with us every Friday. You see the disclaimers there. We can't guarantee you much in these shows. We can just offer our opinions. Those are guaranteed opinions, is what you have there. And I like the disclaimer there that March is the month to check your battery sump pump back up. Not April, but March, because the rain that we've had around here the last couple of days has been impressive. Well, I've had a number of thoughts cross my mind for the weekly update this week. There's just been a lot of interesting things going on at the kind of the below the surface level of the markets of late. And the significant thing has been that the traditional drivers of the stock market, whether it's the tech stocks or the businesses that are running things, have normally been running, kind of pushing the market higher in the last few weeks, in the last few years. And what I've noticed in the last maybe 2 months or so is we've seen an increase in the demand and in the pricing of a number of different commodities. And I thought maybe today I would take some time to talk about that, to point out why that happens, what that means, and how that might affect you. There's no doubt going to be plenty of advertisements on the TV shows you're watching, encouraging you to convert your IRA to gold or silver or things of that nature. And I'm not sure that's the right thing. But if you've got questions about those commodities, we're here to help and encourage you to walk through those kind of thought processes. I just thought I would just talk about generally what is money. And that's a idea that maybe we're not really taught so much anymore. But money is, we're used to thinking it's this stuff in my money clip right here, that it's a $20 bill, a $10 bill, or even I've got a Ben Franklin in there today. And so that's what we're taught money is. But really, money is more than just a piece of paper there. And I think the more that you can wrap your brain around that idea, that you can accept that money is probably not the safest place to paper money is probably not the safest place to try to retain value. And so what is money? It's a variety of things. It's a medium of exchange. So I could take these dollars and go out and get lunch today. I can do a variety of things. And in most places, it's pretty reasonably accepted. It used to say on here, got to get my readers on for you on this idea. But down on this $20 bill, it says this note is legal tender for all debts, public and private. So this $20 bill is that. This Ben Franklin doesn't say that. Oh yeah, it does. It says the same thing. This note is legal tender for all debts, public and private. But it's really not. If you go to a variety of places, they will tell you they won't accept bills greater than $20 bills anymore. And so even the idea of money being a medium of exchange, it's really shifted a bit over time. It's a store of value, and a store of value means that I'm converting my time, my talent, my treasure, my creativity. I'm trading all that for some value that you or somebody else is going to pay me for that. It may be wages or a variety of things, but it's that transaction is communicated with money. And most of us expect that transaction, that the value we're given, will store it very securely. You can go back and read about the 1920s and 30s Germany, where the German money, they'd have to take a wheelbarrow full of money just to buy a loaf of bread. And that's where the value of their money just started going down and down and down. So you'd have to use more and more of it to buy things. And then it's a unit of account. Like I pointed out, a $20 bill and a $100 bill, that it's easily measurable into different units of accounts, so that you can transact with the needs of what you have. Like you wouldn't have to give $100 bill to buy a loaf of bread. You could use your $5 bill to do that. And so those are the primary components that most folks are looking at for the essence of what money is. And then there's different forms of money that really I think are worth considering. There's a commodity money, there's representative money, fiat money, and digital money. And commodity money has shifted forms over time. And I don't know if you know the history of it, but over time you've seen seashells be a form of commodity money. There was a time in history where salt was used as commodity money, and then gold and silver. I brought a gold coin in, and a gold coin has been used as commodity money for a long, long time, probably back to biblical days. And commodity money, I think, gives people a sense of security. The U.S. used to create their coins out of silver, and they've not done that since probably the early 1970s. And the benefit of a commodity money is that it gives individuals a feeling that I don't really have to rely on the government holding this value of this money steady. The underlying value of the commodity will do it itself. And so commodity money tends to hold its value reasonably well, whatever that commodity is doing. If you have a 1880 US silver dollar, it's going to be worth whatever an ounce of silver is, irregardless of what the US dollar has done in value over time. If you happen to get our newsletter, you'll notice this month that I had sent out the newsletter with a bunch of old stamps on it. And stamps are maybe a variation of money. You pay a certain amount of money for the stamp, and it doesn't allow you to exchange it for many things other than getting a letter from point A to point B in the United States. But you can see that like this has not held value. This one is like a 2-cent stamp, which one day that would get a letter from point A to point B, but now you got to pay 34 times that to get that same letter there. So you can tell if you had those 2 cents, and probably that was the 60s, if you had those 2 cents just sitting on your desk there, they've lost almost all their value in that 40 or 50, 60 year period of time. And so by having a commodity, it holds a little bit of the value over time. Then I didn't have a show and tell thing to bring for you on representative kind of money, but the representative money in the day the U.S. used to issue, I don't know if they issued gold certificates, but they issued silver certificate. And essentially what a silver certificate did is at the bottom of that bill, it would say this is transferable at a Federal Reserve Bank into actual silver. And those silver certificates are a form of just giving you a little more peace of mind that this isn't just a piece of paper that somebody printed off. It's not just it's not at the risk of the printing press that the people who issued it have available. And so that's representative money. And then you have fiat money. And fiat money is what this is right here. This I've been showing you, is there is nothing behind this. This money is created by the U.S. government, and we're going to tell you as a U.S. government what this is worth. There's no commodity, there's no representative commodity. It is just the full faith that you have in the U.S. government for that to be worth something. And fiat money, you'll see it in a lot of different ways. What came to mind to me was Disney many, many years ago issued Disney dollars, and that's a form of fiat money. That they are the issuer of that money, and that money is only worth something in a Disney scope of a Disney store, a Disney park, or someplace where Disney accepts it. And if Disney would go out of business, that Disney currency is worth zero. Fiat currency has been issued by a lot of different things. The next thing I said is a gift card. It's kind of a blend between an electronic currency and a fiat currency. I've got a couple coffee shops and a Dairy Queen gift card here, and these are only money at those places. If those places go out of business, this is worthless. It's not worth anything. And so that is a form of fiat money. It's just defined by the issuer that it has value. Whether they can maintain it or not, it's hard to know. Along with the US dollar and Disney and gift cards, I think another variation of money might be, I brought some old stock certificates that I found at home, and the stock certificates really are a form of money. They're not kind of as clear and concise as, you know, a medium of exchange, a store of value, and a unit of account. They have those ideas, but most of the time we wouldn't consider those something. If I need to go to the grocery day, I'm going to take a stock certificate or my shares of stock there, because even though it is a medium of exchange and a store of value and a unit of account, I'm not going to have the liquidity with a stock certificate that I would with, say, some currency. And so that's an idea. But when you think of stock certificates, this one is the capital stock for Payrock Oil Incorporated, issued in October of 1948. Pretty sure Payrock Oil didn't store the value. I'm pretty sure they went out of business. They had a cute little certificate here. However, it doesn't do me any good in converting that to money today. And so as you're thinking about those sorts of things, and even when you own stocks, sometimes we lose track of the fact that really all we have when we own stocks is a representative of ownership in that company via the certificate. It's you sure you own some of the company, but I think as investors, what we ordinarily do, what Doug, Phil, and I look at is that we're just really exchanging these certificates amongst other investors. We're not really thinking that we own that company and have great influence over it for an extended period of time. And then a final thing that I thought about that kind of is a good picture of kind of fiat money that I brought was, this isn't really money, it's baseball cards, and they've held value. Generally, they've held value really well, but you can't exchange them. They don't have the liquidity, because what you're going to get for a trading card is going to vary wildly. If they put it in an auction and it's a very scarce one, it's going to do very nicely in today's market. However, it's a volatile thing. But I brought two different ones. I don't remember the date on this one. I don't even remember who Dion Glover is, but I brought a basketball card, and this basketball card was printed after this baseball card. In the olden days, the Topps baseball cards, the checklists were often the most valuable ones, because the children, when they were buying baseball cards, they'd take out their ballpoint pen and scratch on this thing. And so seldom was a checklist in kind of mint condition. And this was a 1991 Topps card, and I think this one is called Upper Deck. It's a different brand than Topps. But what Topps did in the mid 1980s until sometime in the 1990s is they did kind of what the U.S. government's been doing. They turned on their printing press and just sped it up. And these baseball cards are just printing. And today you can probably still go out on eBay and buy some of the mid 1980s and 90s Topps baseball cards, probably at the same price or less than what they were then, because they printed so many of them. It brought down the value of all the cards. In the previous years, I had a 1973 series of cards, and I think when I looked on eBay last time, that whole set of cards is worth about $1,500, and I only paid probably 10 cents a pack for the cards in the 1970s. And so they didn't print as many of them. They held their value, and the demand has gone up for them over time. What Upper Deck did is they put some little seals on these things to kind of notify that this can't be easily counterfeited and it can't be reproduced very easily. And they didn't print as many of them as Topps was during that period of time. So what happened, I think I'd have to double check with my buddy Steve, but I'm pretty sure that Topps lost their kind of leadership in the sporting card thing for a period of time to Upper Deck, because they were printing so many, and the sports card lovers didn't want to have something that wasn't more valuable down the road or as scarce. And so Topps kind of lost the leadership for a while, and then this Upper Deck one in 2002 probably was more scarce than something in 2001. And that's really what we're talking about. Why I'm even having the conversation about money is when a organization, whether it's Disney or the US government, turns on the printing press, and the faster those printing presses go, the less interested people are in owning those particular forms of money because they get devalued. And so then you had the latest technology, cryptocurrency has crept into the existence, and it has created a lot of stir. It's created a lot of curiosity. And I thought I'd just specifically jump into what is cryptocurrency for you, give you a kind of a high level explanation of cryptocurrency. I'm not going to be recommending it. I'm just giving you my understanding at this point in time, and I'm learning all the time on cryptocurrency. It's a relatively new idea compared to, commodity money or fiat money or representative money. Crypto is relatively new. It's electronic form of money, and you'd be familiar with it if you've used credit cards or if you've used gift cards. It's going to work very similar to that, except for mostly people, I think, will be transacting using this, and they do it in things like Apple Pay and other areas, even on their phone, is really a form of electronic currency. And what has really been interesting is any kind of money, it's only as valid as the belief of the population in that money. If people start to lose belief in that money, the money starts to be less valuable, or you might see it in the form of inflation. And so with cryptocurrency, what's really intriguing to me is the masses are starting to get more interested in it. The younger generations are probably they're the leaders into it. They've been using cryptocurrency for probably a decade or so, since the Bitcoin came out in 2009. But there's a lot of things that go on with the cryptocurrency. It's based on decentralizing the authority to issue and empower people. So the technology behind it isn't that you have a country or a business that's issuing a currency. It's a group of people. It's community that comes out and they issue this currency, and they use technology to do that. And when they do that, they do what's called peer-to-peer technology. It's not issued by a specific government. The U.S. Federal Reserve, I think, has tried to come out with their own cryptocurrency, but I think the idea that they will keep printing things makes it less trustworthy to the masses who are already using some form of electronic currency. What the electronic currency does is they have a thing called a protocol. It's a parameters. It's a group of rules that dictate how this particular currency works, and it's not enforced by the Federal Reserve. It's not enforced by a government, say Mexican government or the German government. It's enforced by the users, by the community. They're the ones that enforce the parameters, and they keep the stability in there. There's different versions of it today. Some are more highly speculative than others. The prices are shifting up and down more so than what you're used to seeing with your own currency, but they are being used to pay things. They're being used to hold value, and they're becoming more and more popular with time. From best I could tell, Bitcoin is currently the most popular and common one. It's, like I said, it's been around since 2009. Satoshi Nakamoto is the fictitious person that came up with it. This person issued a white paper then explaining how this idea would work, and it's been unfolding since that period of time. With specifics to Bitcoin, with the protocol that came with it, it's issued a total of 21 million Bitcoins. That's the most that'll ever be there. And they didn't come out all at once. They're being distributed in a decreasing distribution. So they issued a certain number at the beginning, then a few months later, they're issuing a few more, but not as many as the first distribution. And each distribution they have is less and less and less than the previous one. And then when they get to the total of 21 million, there's no more Bitcoins that are going to be distributed. What's appealing to people that don't trust governments and other issuers with fiat money is that the total amount of it is limited. When a government has the ability to turn on the printing press, it just makes all of the money that all the people that have that money have in place worth less and less over time. There's a thing that's called proof of work, which is part of the mining process. The mining process is designed to keep the security and the stability of the cryptocurrencies in place. And so when you hear of miners, it's not somebody with a pickaxe and out there beating on the countryside. It's people with computers who are working through these complex puzzles, mathematical puzzles, to ensure the integrity of that particular cryptocurrency. That's the high level essence of what money is. It's a high level essence of cryptocurrency. I don't know if you can see this spreadsheet I put together or not, but this, I just did a spreadsheet, and this may or may not be exactly right. It's my math of trying to understand how Bitcoin is reducing the distribution of coins over time. In 2009, they had what was called the genesis, or the beginning distribution of their coins, and they issued half of everything that's going to be distributed. They issued 10,500,000 Bitcoins at that point in time, which is half of the 21 million Bitcoins. And they issue those, I'm trying to look at my note here real quick, on a certain number of Bitcoins daily. So that every day there's a certain number of those 10,500,000 that are issued. So as those miners are going out and trying to solve the puzzles, they're getting some of those every day. They're coming into them. And so as the Bitcoin issuance gets to about a 4-year period of time, they cut in half the number of Bitcoins that are issued in that cycle of the issue. And so in 2012, instead of issuing 10,500,000 more, they issued 5.25 million Bitcoins for the next 4 years. And then they cut that one in half in 2014, that was 2.6 million. And then in 2020, it was cut to 1.3 million. And so next week, we're going to see what they call a halving of the Bitcoin, and it's going to drop down to this 656,000 Bitcoins over the next 4 years or so. There's a lot more to it than what I've just described to you. I just thought I'd give you kind of an intro of what is money. It's a concept. It's not a fixed value, because it involves so many moving parts out there that to think that my money will never change in value is kind of Pollyannish. It's not true. Our governments a lot of times want us to think that because they want to trust that everything they're doing is okay, and it's generally not. Governments tend to spend money they don't have, whether that's a local, state, federal, or maybe even your church government. They tend to spend money in ways that you probably don't with your own checkbook. And when money changes, it leaves no one alone when it does that. We're all affected when the value of money changes. You all can, if you keep a Quicken or some kind of budgeting software, and you look back at your grocery bill over the last 5 years, you can tell that the lack of fixed value of your money is affecting you by what you're paying at the grocery store. We're paying attention to these things on your behalf, and we're readily available to help you through a conversation of these. So just call us with the questions you might have in regards to money, and specifically the forms of money you have in place. That's a lot. Hopefully I didn't overwhelm you all with the idea of money today. Let me give you a quick update on the markets while we are here. We got a couple more minutes. The markets have been kind of showing some limited strength the last week. We've gone up a little bit, but we haven't done a ton in the last week. There's been a little more volatility. There has been, like I said, there's been a increase in the demand for some of these commodities this week, and that's just, I think, just an uncertainty that comes along with a lot of the time that we're in an election year. A lot of uncertainty that goes along with volatile events going on around the world. I'm going to share my screen and just talk you through the market real quick. So here is the NASDAQ. That's what we've looked at quite a bit over time. And last week I showed you these channel lines that we had been trading in the NASDAQ. And we got down to the bottom channel line, dropped below it last week, rallied up a little bit this week, and we're riding right on this bottom channel line. And that's what we're paying a lot of attention to determine how we move forward with reallocating your funds and protecting your funds the best that we can. And so we'll keep an eye on this. The trend is your friend. It's still trending upwards. We're just a little more cautious as the sellers have been a little more aggressive of late. The S&P 500, you can see that this channel line that we had with it's trading below those channel lines now. What we're watching for is this line right here is what's called the 50-day moving average. It's the last 50 days, essentially the average price of each of these daily activities. This tends to be for stocks and indices a trampoline type thing. If it isn't a trampoline and it drops through that on the downside, it's a warning signal that you may not want to be as aggressive as you might have been during this whole upward trend here. And so we're paying close attention to that for you as well. And then finally, the S&P 600 is smaller companies. And I pointed out again last week that these haven't been going anywhere. We were hopeful that maybe that it was going to build a channel lines right here and start working its way up, but you can see that those have given way to the selling pressure of the spring. And so that's what's going on in the markets. It is a great day to be alive. We are thankful for your involvement in our business and our opportunity to serve you. And anytime you have questions, you have concerns, we're here for you. Call us anytime. And if you know friends that might want to join us in the future, don't be bashful in sharing the link with them. In the meantime, we'll see you next week and have a great weekend.